Hello and welcome again to Property Point. I'm Tony Kaye, I'm the editor of Eureka Report, and I'm joined once again by Nerida Conisbee, Chief Economist of REA Group, which is the owner of realestate.com.au. Welcome, Nerida.
Thanks for having me on.
Now today I wanted to have a chat about property yields and just to see what's happening in that particular part of the investment market.
Yeah, I mean, property yields have been firming. The primary reason for that is we're seeing stabilisation of rents or in fact declining rents. At the same time, prices have been shooting up quite rapidly. If we have a look across the market, the best performing suburbs in terms of capital growth are now performing the worst in terms of yield. So, I think with residential, there's that pick, do you go for a market that has high capital growth or do you go for a market that has a high yield? And often they're very different markets.
Yeah, there's always that trade-off. What have been the key factors behind that decline in yields?
It's primarily been price growth. So markets like Sydney at the moment, particularly the inner suburbs of Sydney, we've seen prices in places like Woollahra increase by around 50% over the past 12 months. So it's a huge increase on an already expensive suburb. At the same time, we haven't really seen much change in rentals. So, if you're in Woollahra and you're wanting to rent, you're probably going to get quite a good deal. But if you're an investor and you're buying at the moment, your yield will be comparatively quite small.
As you say, rents have pretty much stabilised. In some cases, they've gone backwards.
Yeah, great time for renting. I mean, like you say, it's been, in some places it has actually declined. It's really only been Sydney and Melbourne where we've seen an increase in rents. Everywhere else they've been dropping. So yeah, all those investors in the market have been a positive if you're a renter.
So from someone looking to get into the investment scene from a yield point of view, what should they be doing now?
Well, I would stay away from the capital cities of Melbourne and Sydney. In both those cases, yields are looking pretty tight at the moment. If we have a look at investors in those markets, they're typically buying more for capital growth than they're buying for rental yield. Regional areas are worth having a look at, and if you go into some regional areas, you can get quite affordable housing. So you can get housing, priced 200, 300,000, but at the same time the rental level is quite high relatively. So the yields can be quite high. The thing that's a bit of a challenge though, you often will not get any capital growth on those properties, and in some cases they can actually decline. So again, coming back to mining towns, which are probably the most challenged at the moment, they're seeing big drops in prices, but rents are still pretty stable, so yields are pretty good at the moment.
It's that ongoing trade-off, isn't it, between capital growth and yield?
Yeah, yeah, that's exactly right. I mean, and I think one of the things with residential property is that people do invest primarily with the expectation that there will be high capital growth, and fewer investors look for the rental yield, but certainly it is worthwhile looking at and looking at those regional areas. Looking in smaller cities as well, smaller capital cities is worthwhile.
One of the factors working in favour of investors, I suppose, is interest rates being so low. So even though your yield's lower, your outgoings are potentially lower as well.
Yeah, I mean, if you consider the 10-year bond rate as the risk-free rate, there's still that significant gap between what you're going to achieve in a yield for the average residential property and that 10-year bond rate. So it's still positive, and so I think that gives supports the investment decision of buying residential property. But at the same time, yields are still continuing to firm, and particularly in our big cities.
Well, we'll come back to that apartment situation, particularly in Sydney and Melbourne again, when there's a lot of stock on the market. There's a lot of construction activity going on. You go out into the suburbs. There's a lot of activity going on out there as well, building smaller developments. So there's no shortage of stock coming on the market.
Yeah, I mean, and in that situation, it's even more challenging because you may not have a yield at all. And I think, particularly markets where we're seeing lots and lots of supply, ultimately you do need to find someone to lease your apartment. And if you can't find anyone, you won't be getting a yield at all. So, that is important really. If you are looking to buy, particularly buying off the plan, understanding what's around you, what the new developments are is critical.
A lot of councils are obviously approving these developments, so I don't know if it's a problem that's going to resolve itself in the short term, or if it's just an ongoing fact of life that there's going to be a lot of construction activity, a lot of apartments coming on in the big cities in particular. You know, if the dynamics are going to change over time, or I suppose it's a bit hard to know without having your crystal ball.
Well, I mean, new development is a positive for a city, and you know, Melbourne has been prolific in the amount of development that has taken place over a 10-year time period. And it's been a positive for the city because although Melbourne is unaffordable, it's not as unaffordable as say, Sydney, which hasn't seen the same level of development. So, you know, I think councils occasionally get it wrong and developers occasionally get it wrong, that they build in the wrong locations or they build in the wrong types of development. But I think overall, that the amount of development taking place isn't excessive, but we may have a little bit of geographic problems or stock type problems occurring across, particularly across our big cities.
And again, coming back to international investors, is most of the interest there in housing stock, or is it in apartments, or both?
It is both, and it's been interesting. We have, I mean, obviously we track the Chinese investment very closely because they are one of the most active buyers of new residential property in Australia. And it's been interesting of looking at the types of developments that they're looking at now. So we can actually look at, you know, we can see what they're looking at buying and how that's changed over time. So initially they did focus very much Sydney and Melbourne, particularly those apartment developments. It's now spread to other cities. So they're now looking more closely at markets like Adelaide, they're looking more closely at Perth. And they're also looking at house and land. So that's been a big shift. So we've seen lots of Chinese buyers looking at house and land and potentially buying in areas, not just Melbourne and Sydney, but again in Perth and Adelaide.
They're obviously having no issues in terms of the legislation to restrict foreign buyers.
It has led to, I think that's why they've moved out a little bit from markets like Brisbane, Melbourne and Sydney. I mean, we're still seeing very strong interest in those markets, but we're seeing a bit more of divergence in where they're looking. So markets like Adelaide and cities like Adelaide and Perth, they don't have those same taxes on foreign investment, and as a result we are seeing more foreign investors look there. So, you know, it has been a positive for those cities.
Well, thanks very much again, Nerida. Thanks for joining us, and thanks also for listening in to Property Point. We look forward to us joining again next time.